Thank you so much for tuning into today's How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com. If you feel that I brought you any value at all, please consider showing your appreciation by becoming a supporter of this free podcast at anchor.fm/Christopher-Uhl/support. This allows me to be able to create more content to give you the tools, tips, and tricks you need to help you trade faster and trade smarter.
Hello and welcome back to the How to Trade Stocks and Options podcast, where we give you the tools, tips, and tricks you need to trade faster and trade smarter. I'm the 10-minute stock trader himself, Christopher Uhl, voted one of the top 100 people in finance for 2019. And today we have a special guest on the line, Steve Burns, one of the biggest celebrities in the financial space with over 200,000 social media followers. And I'm exceptionally excited and grateful to have Steve on the line today. Steve, thank you so much for coming on.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com.
Thank you so much, Chris, for having me on.
Oh man, the pleasure is all mine. So, Steve and I, we go back a little bit. I started on Instagram trying to build up my platform, and one of the first people I reached out to was Steve, and I said, "Hey, you have this huge following. How did you do it?" And basically, he said, "Put out good stuff, and people will like it." And so that's kind of how we all started from there.
Yeah, I tell you, you do a great job on your Instagram feed. I think you're one of the best for the video media on Instagram. I enjoy following you as well.
That's a huge compliment coming from you, Steve. I really do try very hard. In fact, I'm making a video right now, and I'm pointing right at it. I see you, YouTube. I see you, Instagram. I'm looking right at you. So yeah, today we're going to cover a few questions to get to know Steve a little better. He's a bit of an enigma. I know he, being so big as he is, he's actually very, he's not much in the public eye otherwise than on social media from everything I can tell. He has a lot of people who come to his website, newtraderu.com. In fact, I do as well on occasion for some guest posting. And Steve has recently started talking to a few different podcasts, and we're very grateful to have him on ours today. And so I want to introduce Steve, want to talk about him some. And one of the first questions I wanted to ask him was, how did you get into trading?
I think mine has really been a lifelong pursuit. Even as a kid, I always enjoyed numbers and trends and math, and I really got fascinated with compound interest and return growth tables at probably when I was 15 or 16, which I know all the teenage boys love to see compound capital growth tables. So I saw what could happen if you could consistently make returns on money and capital, whether it was interest or capital gain. So I started trying to figure out how could I do that. Then it grew into interest. I started looking at stock quote tables in the newspaper daily and looking at how they moved when I was a teenager. Then as I got older, I started looking at Wall Street Journal and looking at different companies and really starting out as an investor. And I also fell in love with the system of capitalism. It's where entrepreneurs create businesses and products and take care of customers, and they end up going public with their companies. And I thought it was amazing that we would be able to take a piece of that and actually buy publicly traded companies and actually, be a partner with a great CEO and other shareholders. So it's been a lifelong pursuit, and I've always just loved everything about it from a very early age.
Wow, that's cool. Yeah, it's funny you were saying, 15-year-olds having posters of compounding interest right next to the Lamborghini. I know. I was one of those kids that had lots of posters of motorcycles and exotic cars on my wall. But there's special people like you who actually make a difference in the world that have the compounding tables up there. Well, that's cool. So you've been doing this for a little while then.
Yeah, I actually started buying my first stocks. I think I was about somewhere between 19 and 20 years old. I think I might have still been a teenager when I started actually being able to buy my first stocks. I mean, I was focusing on how fast I could get a stock brokerage account and get a 401k or an IRA going, when I was a teenager, because I knew you start young, you can pick up a lot of years on people with the compounding. And
absolutely.
It's funny to this day. I'll post on my personal Facebook, and I'll just post, compounding tables like 8% returns and just how capital grows. And I'll get trolled on Facebook saying, that's impossible. You can't do that. And all this just endless trolling. And I say, I did this. I did this in a much greater magnitude than what I'm even showing. I'm just showing like an SP 500 buy and hold. But it absolutely is possible. And and it's been done by endless people and endless
Right.
traders and investors and different people over the years. So it's just a lot of it believes in the belief that it can be done.
Oh, I agree. There's a lot of mindset that goes in this. I think you even had some social media posts about how trading is mainly a game between your ears. And I know I've been guilty of that a lot, thinking I knew something or having the other end of it where I feel like I didn't know anything as things were falling apart.
Yeah, I think that's the one thing I've learned from one of my favorite trading authors, Alexander Elder, was, trading or investing or even personal finance. There's the aspect of the method you use, the aspect of the psychology you use, and the risk management involved. All three of them. If you don't have the right psychology, you won't make it for just psychological reasons where you'll either quit or you'll take on too much risk or you'll get frustrated or you'll get in a bad mood and you'll just drop the whole thing. It's really crazy, the level of psychology, especially when you go through a bear market. I know so many people that went through a bad bear market in the stock market that quit investing in stocks 20 years ago because of a bad bear market. And that's just looking at that long-term perspective and get the right long-term perspective on trading or investing makes a big difference psychologically.
Oh, absolutely. And I think a lot of people don't really consider that, there's trading, which is to say, in my opinion, a short-term 60 to 90-day window or less. Mm-hmm. And then there's long-term where you intend to be an owner, like the Warren Buffett approach, right? He doesn't trade anything. He's an investor.
Here on the How to Trade Stocks and Options podcast, we give you the tools, tips, and tricks to help you trade faster and trade smarter. And I think the smartest thing you could do is open a new brokerage account with Tastyworks. Tastyworks is a brokerage platform that I use and I recommend. The commission structure is absolutely unbeatable at $1 per leg total. Now, if you sign up for a free Tastyworks account using the code 10MINUTE, that's 10MINUTE, I'll give you $150 in free 10-Minute Trader exclusive bonuses from 10MinuteStockTrader.com just for opening a free account at Tastyworks. Remember to use the code 10MINUTE, that's 10MINUTE, when signing up for your new Tastyworks account today.
And I think a lot of people try and play both sides of the field with the same money without realizing that there should be a trading account and an investing account. And I told someone the other day that, your trading account, you understand that you're taking on additional risk because you want to get additional reward.
Mm-hmm. It's fascinating to me, the difference too, where people try to lump all traders or investors in together in the spectrum from a day trader with 9 screens trying to scalp, a few dollars of shares with a large position size to make money. Then there's, like you said, Warren Buffett, who tries to buy and own something for life, and then in the middle there might be buy and hold investors that simply dollar cost into an index mutual fund or an index ETF. And there's a huge spectrum to say investor or trader, and people try to dismiss the whole thing when, obviously the richest people in the world got there from equity, whether it be Bill Gates going all in on his Microsoft this whole time, or Martin Zuckerberg staying with his Facebook, or especially a Warren Buffett with Berkshire Hathaway going from 10 single digits a share when he took over Berkshire Hathaway, a failed textile firm, to build it into a multiple hundreds of thousands of dollars a share by never splitting it.
Right.
It's a huge spectrum. People try to dismiss it. There's endless ways to make money in the financial markets. You just have to find one that works.
Absolutely. And so that actually leads into my next question is, how would you describe your style of trading?
I've evolved over the last 25 years of being active. I've evolved into more of a swing and trend trader in the stock market. My watch list, I focus on the leading stocks and indexes with leverage. I might trade at 2 times a leverage ETF, and I'll trade the leaders of the entire stock market for individual stocks. I mean, that's where the majority of the returns come from. It's sort of like the Pareto principle, with about 80% of historical returns in the entire stock market come from about 20% of the stocks over the long term. They're not all Apples and Amazons and Googles. There's a lot of GoPros and Snapchats, they just don't make it. But an index can give you exposure to the ones that do make it. That's why, they go up over long term. The buy and hold really only works with an index or leading stock, because not all stocks go up forever, but the ones that do are always captured inside of an index, because that's how they rotate them in and out. So that's
that makes
part
sense.
of the secret. Yeah, and so I try to go the buy and hold. That's a proven strategy that's worked for the last 70 years. But I use moving averages to smooth out the bear markets and stay out of the bear markets, and to use leverage to be even more long during bull markets. and also
Right.
throwing in leading stocks. That's really where I made all my money, was indexes and leading stocks over the last last 25 years.
That makes a lot of sense. And you know what I like about that is you're not chasing, every opportunity that comes along. You have a set plan, and you understand the dynamics of the market in general. That makes a lot of sense to me.
Yeah, absolutely. That's the big thing. People also, they always say you can't predict the market, or, 90% of active traders lose money.
Oh, right.
Yes, but how many have an actual plan and system? The 10% that are making money might be the 10% that actually have a systematic process that's proven to make money, where they have the right risk-reward ratio. They've
Right.
tested their strategy. They go for the things that have worked over the long period of time. And, they don't always win. You have drawdowns and losing streaks, but over the long term, it plays out if you have an edge.
Right, absolutely. So do you also trade options, or do you only trade ETFs and single names?
I do options now and then. I did a lot more heavily. I was more heavily in options for several years, around 2011, 2012, 2013. But I've really evolved more into more straight equity plays.
Oh, okay.
But I did love. I mean, I've written a few books about options, and I really I enjoyed the math of all the options. I really enjoyed learning about them, reading the books, and actually trading them. Had some huge wins with options that were crazy, but the leverage and the immediacy of the returns made me really switch back more into equities.
I get that. And I was trying to explain to somebody the other day that if let's say you had $1,000 account, just for example, and you put it all in one single stock, and that stock went down 5%, you still have $950 left. And if you had put all 1,000 of that into options, let's say you bought out of the money call options and it went down 5%, you have nothing whatsoever. And this person just didn't understand the difference. And I'm like, you don't get it. It's an either all or nothing situation with options. And he's like, well, no, it's not the same. You'd have so much more returns. And I'm like, no, bro, listen, it's 5% down, and the underlying has two different impacts on these two different underlyings here. We're talking about a derivative, and then we're talking about the actual equity itself.
Yeah, it's exactly. That's the same exact thing I tell people. They want to get heavy into options. Is like an equity is an asset. A option is a bet, a specified price and time bet. You can have amazing leverage with it, and you can use some more in the money options to actually act as a synthetic stock with limited downside versus regular stock. But like you said, it's all or nothing bets for the most part. People ask me what kind of stop loss can they put in for an option contract. And I'm like, you really can't do that. Your risk management has to be in your position sizing.
Oh, yeah.
And the danger.
That right there is a great point. For me, this summer was my biggest drawdown ever. I don't want to give you a number, but it's embarrassing. And it's because I got really big, long gold, and I was wrong. I was so wrong. But I was using my ego instead of my brain, and I was just continuing to add. I was averaging down, which is a terrible strategy. Never average down, only average up. And I didn't know that at the time. And I just watched as my account went down and down and down. And when it got down to I think it was just under 1,200. I can't remember exactly what it was, but I was like, I've got to stop this. I have let this bleed so long that my account is not going to be recoverable for a good long while. I've got to stop here. And I could have avoided all of that if I had just traded smaller. And if I had had a full loser on that small trade, whatever. But I went big because I was really convinced, and I had a few what I thought were helpful hints from other people that gold was going to go long, and gold had been going down. So a contrarian play would be to go long, and it was just it was a whole hot mess. That's what it was. But I learned a lot from it, and that's why I don't mind sharing that with the podcast audience. Is that these are the kind of things that I want to share with you guys and be able to help you so that you don't make the same mistakes that I've made. And I'm sure Steve has some examples of some expensive lessons he's learned from.
Yeah, like you just said, it took me about 20 good years to learn those lessons. My aggressiveness. I mean, it took about 20 years for me to quit going so big. And two big key lessons. I had a 50% drawdown from 1993 to March of 2000, I got lucky. I got very lucky, sort of like some of the crypto guys did. And my original mythology was, investing in tech growth stocks, which was all the .coms are in there. So I went and bought a lot of tech and mutual funds in tech, and I was all in tech for the 90s, if you can imagine that. And I held all in tech from like about 93-ish into March of 2000. I had enough to pay off my first house when I was 28 years old.
Oh, wow.
With it, if I had chosen to.
Uh-huh.
But I ended up not having an exit strategy because I thought that was I was like one of the crypto guys nowadays. Like, that's it. You just invest in technology. It goes up. The companies grow. Not understanding it was a .com bubble. So I had a 50% drawdown from my equity high in March of 2000 to the low somewhere in 2002. I was down about 50% from the peak. So that's where a lot of my lessons came from. I tried to start actively trading after the March 2000 peak and learned that I just got lucky. I mean, it was a good luck. If you can go do this and get lucky and pay your house off early, if you choose to do that with your winnings, I mean, that's a hell of a good game to be in.
Yeah, for sure.
But and some of the crypto guys got that. I mean, some of these crypto currency guys had that opportunity. Whether they took the money off the table and did it is another question, or how bad their drawdown is. But I learned from Paul Tudor Jones. That's what you're talking about. He had a paper on his wall that said "Losers average losers," and I thought at some point in the last I've had him about 8 or 9 years ago, I started thinking, Paul Tudor Jones not going to add to a losing trade. Who the hell am I to add to a losing trade?
Yeah, absolutely.
So I quit so solid. It drives some of my people crazy because I will not average down anymore in anything.
No.
Ever.
In fact, where I heard that was actually from Dennis Gartman, who is notoriously the wrong direction in every way possible. He was at the Dallas Money Show. And actually, this was really, really hilarious. He got on the little lectern there, and he was kind of just like a preacher who was mad at the crowd, just like yelling at everybody. You're wrong. Don't question me. I'm Dennis Gartman. Don't you know who I am? Oh, man. I wrote the Gartman letter. Don't ever average down. Don't use options. It was great.
Yeah, I do remember that.
It was spectacular.
I do remember that being one of his rules. I do remember that. You mentioned that, the Dennis Gartman rules.
Yep.
I thought, that's one good rule he has.
It's a great rule. But that was the first time I'd ever heard, don't average down. And after that, I mean, I had just gone through the experience of averaging down and seeing what a bad idea that was. It really stuck in my mind.
Another great Paul Tudor Jones quote, which I think he hasn't had a losing year in his funds in his entire career. I don't think, if I remember that right, 30 years he's never had a down year, which is unbelievable for anybody. Yeah. That's like only Bernie Madoff might have accomplished that through chicanery. But one of Paul Tudor Jones' quotes was, some cotton trade taught him a lesson, and he had to ask himself, does he want his life to be a pursuit of pleasure or pain? And after some cotton trade, he never went so big anymore and risked everything on one trade.
You know what? I think I've heard that. You say that. Have you read the Tony Robbins book about money? I forget what it's called.
I purchased it, and I read the Paul Tudor Jones and Ray Dalio chapters.
I think it was in that chapter, yeah.
His Paul Tudor Jones interview in that one talks about the risk-reward ratio and the 200-day moving average, which is something I've preached for a long time. It's great to hear Paul Tudor Jones call those things out.
Yeah. Could you talk about that a little bit for the podcast audience?
The risk-reward ratio and the 200-day moving average?
Absolutely.
Those are two huge keys in profitable trading. Your risk-reward ratio is defined on your entry. Your stop loss and your position size is your risk. Mm-hmm. So whenever you enter a trade, you have to know when you're going to get out if you're wrong. That will avoid having big losses. And your profit target is your reward. And if you have an open-ended profit target, like trend followers, they just let a winner run as far as it'll go. I've had a bunch of success in that during great bull markets with leading stocks. Your reward could be unlimited. You don't know how far it's going to go, but so you always have an upside running with a trailing stop and see how it reacts at your profit targets. That's your reward side. If that's bigger than your risk side, that can create profitability because you're not going to win every time. So many people try to be right every time and think everybody can predict everything. But it's really how small you lose and how big you win. That's where the profitability is. If you have a 5-to-1 risk-reward ratio, I think you can have a 20% win rate and still make money.
Yeah, I remember him specifically saying a 20% win rate would still be profitable over time because you could be completely dead wrong on the other 4 and still break even. Yeah.
Yeah, and a lot of long options have that opportunity with long options. I know guys that played these long straddles and strangles for years, small, and they lost money, and they had made an absolute killing in the fourth quarter. But you have to have a little small losses for a long time before the volatility spikes give you the money.
Yeah,
that's
exactly.
What's interesting in any kind of a system, can you get through the losing streaks? And that's one thing a lot of people, new traders cannot accept the losing streaks and the drawdowns. And the other one, the 200-day moving average, Paul Tudor Jones, I think he said, everything I trade, I measure by the 200-day moving average. When it goes below that line, I just get out. He's not going to hold something. He's not going to hold something. That's one of his metrics, which is saying one of my metrics too is the 200-day and the 250-day. I think I'd also published all that before he even came out and said that. I never heard.
Well, he got it from you. Let's be honest here. He got it from you.
That's funny. I felt so validated at that moment because I had so many arguments over the years with people. I'm like, man, you can't get a better person to quote than Paul Tudor Jones. But it's real popular with trend followers, and even CNBC talks about it all the time. I mean, historically, the 200-day has been mentioned by a lot of market wizards, and that's it's a risk-reward ratio for like buy and hold investors. They have those big drawdowns during 2008, early 2009, 2002, late 2001. But if you just get out the 200-day moving average, you've captured downside. You just get out.
That makes a lot of sense. Now, we've been trading below the 200-day in the S&P for a while.
Yeah, I had people send me messages and thank me because one of my books, 5 moving averages that beat buy and hold for the S&P 500 index. I got a lot of people to go to cash that read that book and actually took those signals seriously.
Well, look at that. That's good. I'm happy to hear that. I also am sitting on cash, and I have been for about 45 days, and it's driving me nuts. I have actually not opened my brokerage screen in about a week or two just because I'm all cash and I'm seeing the market it's up 500 points one day, down 600 points the next. And it's like this kind of volatility is not conducive to my style of trading.
Yeah, I mean, it's not for mine either. It's just, I'm looking for trends in the upside. And another thing people love to come out, well, you should be short, make money short. And like, that's not how it works. If you would have been short all these times for the last, I guess it's been about 9 years now, you could have gotten killed if you'd have short all these signals. It just now is beginning to work. I mean, it worked a little bit earlier this year, and it worked a little bit 2011. Every now and then a flash crash. I mean, it'll work every now and then, but overall, shorting in the stock market is not a profitable method the vast majority of the time. Generally, you lose more in bull markets than you make in bear markets.
Yeah, I agree absolutely. I mean, if you just look at any stock chart over pretty much any slightly long duration of time, it's going in one direction, and that's a 45-degree angle up to the top right. Yeah. So shorting it works if you can time it really well. I mean, I'm sure you and I have both had an opportunity to have made money and be like, oh, I'm a genius. Yeah. And then turn around a week later and you're like, oh, what was I thinking? Yeah, because I know I've gone through that for sure.
Absolutely. The pain in 2008, so many guys I knew were shorting and they'd be up huge. I think I had a few of them myself every now and then, 2008, and be up huge. And then just the volatility in downtrends is so much higher than uptrends. Yeah, the volatility, uptrend can be, like you said, look and see a nice smooth 20-day moving average or 50-day moving average as support for months. And in a downtrend like 2008, or this started out volatile, but it's really gone straight down in December. But that's very rare. But the volatility is what makes the downside so hard to trade. It's not the same as the upside because of the wild moves, and some of the biggest rallies happen during bear markets.
Yeah, absolutely. I saw some stat the other day where it was like the biggest rallies that were ever done were it was some staggering statistic, like the biggest 10 rallies of over 10% in like 3 days or something were all in bear markets. Or on the way to bear markets. And that's what a lot of people just don't understand, is that it goes down and it goes up so much faster. Those candles are so much bigger than they ever were. Oh, yeah. I mean, I was making a joke a little while ago that there were all these baby candles at the end of 2017 as it was going up. And then all the candles grew up all of a sudden.
Well, that is absolutely the truth. It's incredible. Because you can be, that's the thing people keep on about the short side. Like, you can be on the wrong side, the short side, or the long side in this kind of a market.
Just depending on the day.
Yes. Yeah. So you can get killed at being long or short. And they say, well, you can double your chance of winning being short. Well, you can also double your chance of losing being short.
Yeah, absolutely. I had somebody who asked me on LinkedIn. They're like, hey man, is it time to liquidate my 401k? And I was like, I don't know. Depends on the day. You might be up 10% one day and down 4% or more the next. And I was like, I mean, if this is your 401k, if this is a long-term portfolio, like you and I were talking about earlier, I'd never ever, and I'm probably one of the few people who would say this. I never look at my long-term 401k portfolio ever. I will look at it once a year to reallocate it, and that's it. I'm not going in there because I know that there's going to be fluctuations, but I also know that everything's hedged in there. Like, right? I have a balanced, diversified portfolio, and on a long-term time horizon, you've got to have that kind of structure in there.
Yeah, and that is a system. Buy and hold investing with the U.S. indexes is a system.
Yeah, no doubt.
That bets on the market, the stock market in the U.S. going up over time, and the index is rotating the winners in. I mean, so people don't understand is buy and hold is a system.
Yeah, and Warren Buffett would tell you that that's a great system because that's what he does. He even made a bet that was somebody that was like, what was it?
I think he bet a basket of 10 hedge funds. Yeah, he bet a basket of 10 hedge funds. He could beat them all in average, and he just simply went in the S&P 500 index.
Yeah, that's all. And he did. He won. Yeah.
So like he bet. I remember a few years ago he bet with, I think it was Quicken Loans. They had his bracket. He would bet anybody could name the NCAA bracket. He'd give them $1 billion.
I heard that. Yeah.
Because he knew the odds were greater of finding a BB on
let's be real here. He owns several insurance companies. He wasn't worried about it. I mean, they pull out $1 billion every quarter. Ain't no thing for them.
Yeah.
So
he just knew the statistical probabilities were virtually impossible, which people don't realize that.
Absolutely. So if you could change one thing over your course of your trading career, what would it be? Now, I know that's kind of a tough question, but I know what I would have changed, and it would be not to go long gold this summer. But I learned from it, so it's what it is.
I would start with the quantified method and system from the beginning. I mean, you take so much of the psychology out where you are following a process that has an edge from the beginning. I mean, it took me a good decade to really get into a more methodical process. I was more like the average retail investor and trader, just trying to have opinions and bet on things and think I knew something and think my opinion mattered and my predictions mattered, when in reality I should have had a systematic trend following process for the stock market using indexes and leading stocks. And that's what I should have began with, not figure out after a decade of just getting. The luckier I get, the longer my learning curve was.
Yeah, it's really, really interesting. I mean, even somebody who starts with a system, I mean, it may be a flawed system, but it's somebody having some sort of system and then being able to develop it over time, I think is really key.
Yeah, or at least principles, principle based, where, you're long in bull markets, your cash and bear markets, you're looking for leading stocks. You have some kind of, even a fundamental filter for stocks, or just some kind of a process of principles involved, even, whatever you are, day trader, buying a breakout the first hour, just something you can quantify so then you can measure it and you can make adjustments and learn.
Right. Man, I've tried my hand at day trading, and I am not meant for day trading. I can't handle the stress, not at all. I mean, my heart beats so fast, and I start to sweat, and it's like, no, I can't be doing this. I'm not meant for that.
I learned the same lesson. I remember the day. I think it was about over a decade ago. I remember I had actually moved through $1 million in capital, with margin, not the account size, but how much I had traded with my margin account. I had went to $1 million, and I was like up a few dollars on the day. I had traded for over 7 hours, and it was just like almost like it's so dangerous, the psychology and the stress involved with moving that kind of money during the day, and then your ego wanting to win. It's very dangerous. It's such the immediacy of the losses and the commission cost and the time you put into it. And I started, as I went through all the systems from, fundamental analysis to day trading to option trading to trend following. I mean, I've done just about every process you could do to learn about myself. And like you said, I learned I don't want to sit in front of screens for 7.5 hours a day trying to grab tiny little trends inside an intraday frame. It was just I'd rather have a job.
Yeah. And that's kind of how my whole platform started with the 10-minute trader thing. So like I I wanted to trade while still at my job, but I wasn't able to have a trading platform on my work computer. So what I started doing was bringing my iPad to work and kind of like doing it under my desk and stuff. And then I was like, hey, this is kind of fun. I could call it like the 10-minute trader because I only get like 10 minutes a day to actually look at this stuff. And that's kind of how it started from there. Because I get a lot of people ask me, where did 10-minute stock trading come from? Well, that's where I was the guy hiding my iPad under my desk doing my trades. Not that I'm trying to be in and out in 10 minutes. No, that's the opposite of my style.
Yeah, I think my lessons was Ed Secoda was an end of day trader. He's one of the most successful traders the last 40 years, trend following futures. And he said, having a ticker on your desk, back in the old days, they used to have stock tickers, was like having a slot machine on your desk. And also Nicholas Darvis made $2 million in the 60s trading end of day through telegrams. And,
oh my gosh.
I think Tom Bassett, one of my favorite market wizards that I know through social media personally, he does end of day trading and puts on hedges, and so many people that I admired. I thought, all these people are end of day traders. What in the world am I doing? Spending 35, 40 hours a week on this. I mean, it's almost like I started out as an investor, moved into more active trend trading, and then tried my hand at day trading. Like you said, was not for me, and then went back into the longer term swings and trends over multiple days because that's where all my money was made. I mean, that's where I made my money. Checking at the end of the day, going, okay, it's up, it's an uptrend. Let's hold it longer. That was where the money was made.
Right.
Not trying to sit there for 7.5 hours.
Oh yeah, I get that. And a lot of people they want the immediacy of the gains, and they don't comprehend what it's actually like to be in that war room type mentality until they're there. And that's when people really decide, if this is or isn't for you. And it certainly wasn't for me. I mean, a lot of people may really enjoy it, like going to the casino, but I'm like you. I got other things to do with the rest of my day than just sit and stare at a screen to look for the exact right moment to get in and out.
Yeah, that might be where the failure rate comes from, because you have to figure in the time.
That's a really good point.
Because you have to trade much bigger to make the small wins meaningful, which is also another factor of psychology. So yeah, I agree with you. It just wasn't for me. A much better quality of life, checking in the day, and also where for me the money was made. My money was made from 1993 to March 2000, and then I started again 2003 to 2007 was a huge compounding growth time period for me. I learned the lessons from the 2000 crash from the .com to go to cash in January 2008, primarily, especially with all my the longer, bigger accounts that I traded longer term was all in cash until March of 2009. So I avoided the big money of losses of 2000, which that blew people's mind. I remember my wife at the time was shocked. It was only at 4% in 2008. I think it was from money market accounts into retirement accounts. And she was stunned. I said, you don't realize people took 50% drawdowns this year. All my moving averages said go to cash.
Yeah.
So that was my last year. I tried my hand at some day trading in 2008. And that was enough for me.
Right. I get that. So you mentioned your wife. Does she also trade?
She actually did some e-course learning for a big tech company, and her last company was a software company. She retired in her 40s, and she just does the website and our platform full time. She's the one that really was the driver behind the books and the e-courses and the platform itself for new traders. Gotcha.
Okay. Yeah, I had seen Steve and Holly Burns on your books, and so I wasn't real sure, if she was trading or not. So how many books do you have? I know it's a few.
Yeah, counting. I think it's about 20 counting, because I was published originally about 7 or 8 years ago. I did have a publisher at one point. Actually, with me and Holly, when we've been married for 4 or 5 years, we actually started. She started, doing all the Kindle formatting and copywriting and editing and chewing me out for my grammar and designed the covers herself. About 20 altogether, counting everything.
So okay. I would like the audience to understand what Steve just said. He's been in this for 2 decades. He's seen bull markets and bear markets. He understands that in a bear market, cash is a better play than going short. And this dude has written 20 books. So he knows what he's talking about. Because at least by now he would have figured out how to, figured out a couple things, right? And let's also keep in mind that he is actually gracious enough to share that knowledge with you, kind of like we're doing here today. And I think that's amazing. 20 books written on trading.
You can have like a narrative fiction one talking about a new trader versus a rich trader, and a mentoring one. And I've got 50 moving averages that beat buy and hold, has like 50 trend following systems that worked long term, and several different just different type calm trader, the psychology of trading. So I did have a bunch of different gamut. Whenever the spirit moves me, I actually have read, I think it's over 400 trading and investing books. And
holy cow!
I'd read so many, I thought, well, heck, I might as well just write them. So that's where a lot of it came from. I think overall I've read 1,000 nonfiction books in the last 25 years.
No way, 1,000? How does somebody find
books.
The time for that?
I watch very little TV and movies.
Yeah, I get that.
I like to be active. I'm a very just like to be stimulated and active in doing things. I'm not really good at passive things. Mm-hmm. So I've actually enjoyed a lot of it. I've loved social media. I've enjoyed writing the books. I've enjoyed a lot of the interactions. It's been fun.
Wow, I'm really impressed. I thought I did a lot of work. I get up at 3:30 every day, and I work on the website until about 5:30 or 6 when I get my kids up and take them to school. Then I go work a day job, and then I come home and I put my phone and everything away and have real family time. And then when they go back to bed, then I'm back to working on the website and everything. But yeah, that's I don't think my schedule compares to anything where someone's written like 20 trading books and like 1,000 other books. It's unreal.
Yeah, I love learning. That's one thing I've always been passionate about, and love being rewarded for learning. That's the thing. I guess we keep going back to trading, is the big winning streaks and the money and the life-changing capital make it all worthwhile.
You know what? That's a great point. Absolutely. So what all is on your website, newtraderu.com? I know I have had the chance to write a couple articles for you there, but I'm sure that there's more than just articles and links to books. What all do you have on there?
Yeah, there's links to all my social media. I'm on a lot of different social media platforms. Like we see mainly Instagram, Twitter, and have a Facebook trading group. And I have links to e-courses. I've actually created a bunch of different e-courses, different topics, and links to my books. But there's thousands of articles there, for traders to read about trading. I've been writing articles there since 2011. So there's just thousands and thousands of trading topics and guest posts and my posts about, just about anything you can think of related to trading.
Wow, cool. I'm going to have to go dig through those archives for more podcast topics.
Yeah, there's a lot. But
Very
Holly
cool.
Holly's the web developer behind the New Trader U website. She does all this in-house. So she's been the driver behind all that. So she's done an amazing job with the website.
Well, man, that's really cool. And Steve, I would really love to go more in depth on all these books that you've written. So we'll have to have you back on to talk about them. I mean, in a perfect world, I could get you on and we could talk about each one and really go into some detail and give the audience a lot of information they could use in order to better their own trading strategies and learn some of your tools, tips, and tricks to trade better. So that'll be great.
Yep, sounds good.
Yeah. Hey, Steve, is there anything else that you want to cover today in today's podcast?
No, I would like to tell everybody to be safe out here in this stock market. This has been wild. There's been a lot of capital destruction going on.
Oh, yeah.
This is the worst since December of 1931, the worst
wow.
December, and it's the worst week since 2008, December 2008. So very, very dangerous,
That is ominous.
Always play defense first. Always keep what you got and be very careful in trying to compound it.
Right. So do you think we're going to have a Santa Claus rally?
Boy, I tell you, the fourth quarter, every signal I have has gone bearish. All my crossovers have gone bearish. The only thing right now that are bullish on my watch list is the 20-year Treasury, TLT, ETF, the gold miners, and gold is right there at the precipice. I
cannot trade GDX and I cannot trade GLD. Nope. I am done with those two jerks. They stole my money.
Yeah, the GLD when it was in the downtrend, it was my 5-day, 20-day EMA cross under had me out of gold during the downtrend, and I actually had a couple of false signals. Actually caught the last gold move to the upside. Not had to do a huge move to the upside, but a little bit. But I did have bullish signals in silver and gold with crossovers, the GLD, SLV, and a GDX. But like you said, they're not great historically trending ETFs.
Yeah.
So they're not easy to trade, but that's bad when those are bullish charts right now.
Oh yeah, geez, for sure.
I much prefer to have some growth stocks, but yeah, that's where we're at in the defensive market. Even the consumer staple ETFs have all broken down in the defensive sectors. Even utilities and healthcare is all breaking down. So right now, I'd like to leave everybody saying, right now, market, the equities as an asset class are under heavy distribution.
Mm-hmm. So and that is not a good place where you want to be investing, at least not for now.
Not for now.
Cash is a great risk-free position. I like to tell people that,
Yeah.
I had someone on Twitter. They're like, "Oh, there's inflation." Yeah, I know, but we're not talking about inflation right now. Jeez.
Yeah. Much better to lose 2% buying power in a year is a much better risk than losing 30% on the growth stock. So.
Yeah, exactly. Like Facebook after earnings, right? Jeez.
Yeah, there's been some nasty stuff out there, but I hope everybody just stays safe, and I wouldn't even look at equity until we get back over at least a 250-day moving average at least.
Well, there you go, folks. Some parting words from Steve. Look for the 250-day moving average before you start trying to get back in.
Thanks.
Well, Steve, hey, thank you so much for being on the podcast today. I really mean it. This is the first time Steve and I have had the opportunity to actually speak on the phone. So I can't express to you how grateful I am, actually, Steve, that you and I have connected and that we've been able to establish some good rapport and be able to do this today.
Yeah, it's been great talking to you, Chris.
Absolutely. And I look forward to having Steve back on. So that wraps up today's How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com. Make sure to come back tomorrow for more tools, tips, and tricks to help you trade faster and trade smarter. And I'll see you on the next episode.
Our mission statement at 10MinuteStockTrader.com is to empower others to employ the strategic advantages of options trading and to provide confidence that they can profit in any market scenario. Please be sure to give me a like and a comment below and tell me how you can use this in your own portfolio. I have so much more content just like this over at 10MinuteStockTrader.com. There you'll find all the bullish, bearish, and neutral strategies I trade, as well as everything I've traded in my portfolio over the last year. Thank you so much for sharing your time with me. It really does mean the absolute world to me that I've become a part of your day. I've been your host, Christopher Ewell, and thanks for stopping by. Now that wraps up today's How to Trade Stocks and Options podcast. I've been your host, Christopher Ewell, and thanks for stopping by. 10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Ewell, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Ewell are not in the business of transacting security trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client's situation or investment objectives. 10MinuteStockTrader.com and Christopher Ewell are not licensed financial advisors, registered investment advisors, or registered broker-dealer. Stocks, options, futures options, and any instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment trading decisions and for evaluating the merits and risk associated with the use of any financial security and brokerage platform. For more information, please visit 10MinuteStockTrader.com/legal. And thanks for stopping by.